Dale, you're muted. Dale, coach.
Okay, buddy.
Hey, yeah, you were actually unmuted. I heard you sneeze. So
oh my goodness. All right.
You just had it opposite. You're unmuted now.
Yeah.
I'll let you go on. I'm here.
Professional. All right. Anyway, guys, what I was talking about was euro. Looked like it turned in Europe, so it's going to be real critical for it to hold this 123.5 level. Really, right around here. I still don't think this is enough to complete the move. I'm still looking for these highs to be taken out at 25.5. But I would say a lot of people are surprised that we've had no follow through from this breakout. We're testing it right away. So I wouldn't just jump on it just because it's pulling back. I'd wait for some type of reversal candle between here and 3.5, knowing that if you have one, you have a point of reference. Otherwise, you nibble a little here, a little bit here, and you come up with a stop, say around 23.20. We shouldn't get back under this 50-day moving average if the scenario is going to play out and we're going to get new highs in euro. And I'd say that this dollar rally is surprising people. So, you know, we already know positioning is still real extreme in the euro. You know, you look at a daily, we're almost higher on the week. Let me look at the 2-week off number, what it would have to achieve. So to have a 2-week reversal, we need closes over 90.19. So we're still 60 points away from that. And, you know, it is possible. I mean, you know, I've waited for 3 drives. It never happened many times in my career. Sometimes it only takes 2. And it's sure taken a lot of time for it to get back here. So, you know, I'm doubting whether we will or not. So anyway, with dollar strength, something I talked about yesterday that's manifesting is in Canada. You know, we were down here, almost have a little 3-driver here. I described a couple potential scenarios. Either we get a right shoulder up here towards 130, or if the dollar is really good, Canada could make another new high. I mean, it did confirm the high up here. And then so far, so good on US dollar yen, but if you're long from the 3 drive to a bottom formation, good place to at least take half, just like the dollar. And we're much closer in the yen to turning into a 2-week reversal. All we need by Friday are closes over 105.92, I believe. That's 105.95, so only about 20 pips away. I know not many people were looking for an important low down here. Objectives were much lower. So even if it goes much lower and we take out these lows, it was still a good trade, wasn't it? So thank you very much. I'm faint. I'm not fainting. Oh, okay, that's when I was muted. So anyway, we'll see if they continue to squeeze people here. And I just have one other look to see if this ends up happening here. And it would take continued Canada strength or renewed US dollar yen weakness. And I know Steve said yesterday, don't try and bottom pick the weakest yen cross, which has been CAD yen. And I still think that there's a chance for one more drive down to under 80, 79.5. So it could be a nice little tight short here and one more drive down there. And actually, just like the yen wasn't going to be a major trend change, you never know when a low or a high is going to develop into a trend change. At first, every move off a big rally or big decline is corrective. You know, first you get the short covering, the long liquidation. It takes time, but it doesn't mean it's not tradable. So still looking for one more low in CAD yen, 79.5. And wow, these S&Ps, man, great call by Blake on the week ahead video. I mean, it's 2 weeks in a row. When Blake was in Disneyland, Greg called the break in S&Ps, and then Blake comes home and sees it, the major confluence at support here. I definitely don't think it's going to be a straight line, and you know, this could still be another failing rally, but between here and 2,700. So, you know, I can't get long, and I'm afraid to get short here in the S&Ps. I mean, this would be, you know, a decent pop to buy weakness in bearish ETFs. I'm still going to sit on my hands. And I think that pretty much wraps it up. I have a great guest, Mark Leibovitz, and he's with this guy, Lance Roberts, at Real Investment Advice, and they have a radio station. I think they're in Texas, so Michael's going to be with us in a little bit. And anything I forgot to mention here, I'm sure the team's going to cover. So would also like to recommend that everyone hearing my voice test drives our traffic light page. I don't want people running red lights and getting hurt. So, you know, you just look at all the analysis you get. Steve was on Skype with me yesterday. He's so excited, like a kid at Christmas, that, you know, all the improvements to the website are going to be happening in April, and you're going to have a tablet app. So, you know, a lot of people, that was my signing bonus with Blake almost a year ago. I got an iPad from Blake, and the only thing I don't do with it that he does is take it to the bathroom. So we're going to have that application for you guys shortly. And even if you don't want to plunge into a 6-month membership, I mean, try it for $1 for 10 days and navigate around and check it out. And if you're really, really, really dissatisfied about your 10-day trial for $1, I'm going to wire that $1 to you. Let me know. How you doing today, Blake?
Hey, Dale. How's it going?
Good, buddy.
Yeah. So you were talking about the dollar, and you know, this dollar, its move has been very, very surprising today. This has been a really, really big. I actually started
especially on cable, huh?
Yeah. I mean, look at this move. I mean, this is this is just a 1-hour chart.
Was it news driven, Blake? Something on Brexit?
Wow. No. Everybody. Well, Amanda was saying it's end of month flows, and I mean, you know, just the sheer movement that we're seeing in some of these currencies. It's like, wow, I can't believe that we're seeing this type of dollar strength. Now, you've got the pound that is I mean, this has gone straight down. I mean, to chase it down here, you got to be very careful. I mean, we've gone 170 pips. 170 pips, is that right? Yeah, let's see. Well, 72 or 142.50, basically to 140. Well, yeah, like 100 and geez, that's more than that. That's 170 pips for no reason. Like,
yeah, you know, there was divergence there, Blake, but I wouldn't have taken it because I don't like fading stuff when RSI is over 70. I mean, the turn happened at about 75 or so on the RSI.
Yeah.
That's too much momentum, but boy, what a trade.
Yeah, it's pretty crazy moves that we're seeing here in the dollar, like just nonstop. I mean, look at the euro. The euro's gone from 124.80 to 123.80. It's dropped 100 pips. And I can't figure out why, other than, you know, just some flows coming through, just massive dollar moves. The Aussie has come down, the Kiwi has come down, the dollar Canadian is rallying. Swissy has ripped back to, you know, above 95 cents. Dollar yen, and I was long the dollar yen. Now the dollar yen, I wouldn't want to be long here. This is very, very. That you're at the underside of this triangle right now. So just some massive moves, and I started shorting the dollar just about an hour ago, and I'm underwater right now, going, whoa, I don't know where all these moves are coming from. So I've got to be very careful managing these positions here, because you don't want to you don't want it to get a little out of control. But if you look at the dollar, look at the dollar index. Now here's one thing that I did notice about the dollar. Okay, so we have we have this bear flag and a bear flag, but what we did is we stopped at the flag bottom overnight. We stopped.
So you had the top line first, and then you found a parallel off that low.
Correct. Yeah. So this is the same line right here is just put down here, and that has obviously created this massive move higher in the dollar. And again, I don't know why the dollar is rallying the way it's rallying, but I mean, it's like there's not news driven. It's just a squeeze. I guess it's just a massive squeeze that we're seeing in the dollar index, and it's a big one too. It's a big one that's happening, and it's happening all across the board. I mean, look at the dollar Canadian is ripping, Swissie's just flying. The peso has rallied to, basically previous support, which should act as current resistance. The U.S. dollar Norwegian krona is squeezing. U.S. dollar Swedish krona is squeezing. I mean, look at the cable. I mean, the cable just broke through these lows right here, which probably is, in my opinion, it's breaking through lows, and it's going to bounce now that we've gone through those lows. But it's a really wild. It's the most directional move on your chart. Yeah, and I mean, I haven't seen anything like this in out of the dollar in a while. Maybe the market was just so aggressively short the dollar that the dollar is it's squeezing. So just massive moves. And we were at a 38% retracement this is 15 minutes ago. Look at the dollar index. Again, I don't have any answers on why it's going up, other than it's just squeezing like crazy. So, but it almost seems impulsive at this point. So I'm wondering if now the dollar is trying to, put in a significant low at this stage in the game. So
yeah. And it's going to take people a while for their head to turn around that way. I've been looking for one more low. Most Ellioticians have been looking for, one more low, 88 to 87 and a half, something like that. And, sometimes the best moves are when the market doesn't accommodate what everyone wants to do. And then they end up having to chase it. So I agree with you. This might be important, and we may not get the low that everyone's been waiting for a month or so.
Yeah, it's hard to tell, but like I said, this move is just massive. I mean, the pound's down 150 pips, okay, and it's gone more than that, and I don't know why. no particular reason. Just
that almost makes it more bearish.
What's that?
That almost makes it more bearish that there's no reason for it.
You're right. It's like, oh wow, and it's but at the same time, when you're getting these types of moves, to sit here and and try to jump on the bandwagon when there's no reasoning, they could flip back at any point. I mean, we could see a rally, back to in the pound dollar to 140, 150 up here for no reason. Just as we got a no reason move on the way down, we could see it flip around really quick, and especially now that we in the cables specifically, we just took out lows. Let's go take a look at the euro dollar. And matter of fact, let me do something really quick.
Blake, when I was a bachelor, I used to say, I don't chase anything. I don't chase markets or women. Trouble always finds me.
Well, there you go. So the euro dollar may find some support down here as well. I'm thinking, let's see, the Aussie really didn't come off too much. Chi was looking at in our chat room, he was looking at a triangle, so maybe looking at something that looks like this, but Yeah, I mean, the lack of follow through in the Aussie have me a little worried about being too short the Aussie. The Kiwi just came back and tested the breakout point, and you see these are all European currencies. Take a look at like the euro. Okay, so the moves that we're probably seeing, here's the euro Aussies come down, euro Kiwis come down pretty good, euro Canadians come down. So yeah, I mean, just some really massive moves here. Here's the Canadian. Let me grab a trend line really quick. Right up into a trend line here. Swissy, I mean, spike in Swissy probably just, this is a squeeze. Still you know, out of a ascending wedge, which should eventually break lower, but you know, we probably got the market pretty, you know, caught really short here and, you know, getting squeezed. Look at the peso. Peso rallied. Look at this big candle here. That's nasty. I was looking at that earlier and I'm like, you know, I was looking at it as it was drawn like this, and we just squeezed past there to previous support, just spiked up, and now we're showing a bit of a reversal there. These Nordic currencies, this is the US dollar, Norwegian krona, out of nowhere. You know, we're going to be pushing previous support that should act as current resistance. Swedish krona, look at this move. Wow. Again, pretty massive. And here's the dollar index. Why? No, don't know. And we're still, you know, we're still a couple of days from the end of month. So not sure why these moves are all happening, but they have been happening. And you know, again, they're pretty massive. We don't have. Let's see. I mean, we had the Eurozone flash PMIs that came in, you know, I guess a little worse than expected for you know, Spanish PMIs, but I mean, is that enough to really, you know, move the market that much? I don't think so. You know, maybe that started the squeeze, and it looks like a lot of dollar shorts just got squeezed out of the market pretty good, you know. The dollar yen. I was long the dollar yen overnight, and let's talk about this. I got out at 62. Now, obviously, I could have made a lot more than that, but we had an hourly double bottom here, and we could go up to maybe 106. It's possible. But now that move is this move has happened, we even have a divergent hourly RSI. I'd be really careful with being long the dollar yen, especially coming up into the triangle, the underside of this broken triangle. So, matter of fact, I may be selling some dollar yen very shortly. So, anyway, some pretty big move. Let's take a look at gold. I don't want to take too much away from what Steve's going to talk about here, but whew, look at this gold. Gold actually just sold off right to the breakout point. Look at this. I would not want to be short gold right here, as we just came right down to the breakout point, which, you know, may create a bounce here in the gold market. Huh. Again, you know, why did all this happen? I'm not so sure. I got up this morning and I'm like, why is the dollar so strong? And then I started shorting some myself, and I'm upside down in most of the positions I'm in, but I'm not really too worried about it because I'm spread out. I just don't want it to get much worse than it is at this moment in time. So, you know, and you know, some of these times when you have, you know, lack of news that's moving the market, you know, they can flip around rather quickly too. So that's why I want to caution everybody from getting a little bit, you know, too carried away here with the moves that we're seeing. Let's go back over to the cable really quick. See how the cable, Dale, do you see how we broke this support right through here?
I think Dale had to step off for a few minutes, but I see it, Blake.
Yeah. All right. Hey, Stelios. So, yeah, you see how we plunged through those lows. Do you now? You've been obviously up a lot longer than I have. Has there been anything that's been moving the market per se?
There has been nothing. The only thing of significance has been the Chinese premier. Who was it? I can't remember. Somebody from China who said we don't want a trade war. You know, so they see. It seems like they want to cooperate. You know, and they don't want to get into trade wars, which makes sense because trade wars nobody wins. So that's the only big headline that I saw this morning, and I think that's why equities are up. But why is the dollar so strong? You know, probably on the back of that as well. But you know, there hasn't been any huge item that will that has moved things. So
yeah, and you know that those are comments that had come in. They came in. They've been coming in for the last couple of days, and so yesterday, you know, I was online with the guys from our office, and you know, we were like, man, this should be dollar bullish, and that's the whole reason why I went long in the dollar yen last night is because of those comments from yesterday, and then also the rise in risk appetite. So when the dollar yen broke back above this 102.30, I turned around and went long at 40, got out at night at 62. We're up here. Just based on that reason, I'm like, well, you know, the dollar should benefit from this. But I'm, you know, again, I'm surprised at the dollar's massive move that we've seen today. It's kind of like an afterthought. Maybe it's a squeeze. Maybe it's the, you know, the market got. I think maybe the market got a little wrong-footed. Is quite possible. So.
Yeah, it feels like the market suddenly woke up and thought, wait a minute, you know, this is bullish dollar. Like you say, you know, positioning also, you know, everybody's been looking for a reason to sell the dollar for weeks now. So I think you're right, you know, and if you look at the DSI, you know, the chart on cable in particular, it was like 80 something. So there was always going to be a correction. So I think it's a combination of all these things, you know, there's no single reason.
Right. Okay. And yeah, and here's the DSI, guys, so you can kind of see where the cable DSI was getting a little rambunctious at 88. You know, the euro was above 80. I mean, we're at 83. The yen was at 81. So anything above 80 or below 20, you really got to start paying a little close attention to, because that can produce, you know, these types of moves, these types of reversals in the market, and that's you know what we had, and I do recall you mentioning that in the chat room, and I think that you're probably right as far as it being just more of a accumulation of a few things that just brewed and are you know took down the euro and took down the pound, but again, this is one of those situations that if we've seen such a massive move in the dollar, it wouldn't be surprising to me to see us whip back around the other way and the dollar give back all these gains or a lot of these gains for no reason as well. So that's why you have to be, I think you have to be extremely careful about being on the if you've missed the move, if you got up this morning and like just now and you're just sitting in front of the computer and you're listening in, you know, to be long the dollar right now after such a big move in the dollar index, and this is a big move, you know, from the lows, I don't know if it makes a whole lot of sense right at this moment in time. So so anyway, with that being said, I'm going to pass it over to Steve. Steve, are you here this morning?
Hey mate, I am, yes.
Hey, good morning. How are you?
I'm good. How have you been?
Good. So did I catch that correct? You're going out of town for a while?
For almost 10 days, yes.
Wow. So where are you going?
The roads, like last year, exactly the same thing.
The life of the rich and famous.
You stole that.
I did.
That's not your line.
No, it's not my line. But Rhodes is one of those islands in Greece I'd always have wanted to see. So
and you have an open invitation, as you know, so just take advantage of that.
I know I will. I definitely will. So that's great, Steve. So how are you doing today?
I'm good, mate. I'm good. You know, quite a few things to take care before you know, we go with, you know, developers and everything else, and so, you know, it's going to be a busy week for sure, 100%.
So one of the things that if you guys don't know this, one of the things that Steve's been well, Steve's been working on a multitude of things, but one of the things that he's really been working on is the new improved ForexAnalytix site, and then I also uploaded the iPad version, the test beta version on what we call Test Flight, which is how we test out new versions of products. I uploaded the app version of ForexAnalytix, and it's pretty awesome from what I've used thus far. So it's cool.
Yeah, I mean, we have a few bugs to fix, but I think that within a couple of weeks, it's probably going to go live.
Awesome. So
April is going to be an important month. Yeah.
So you guys that use ForexAnalytix, there's a lot of great things coming down the pipeline, thanks to Steve and the technology team that's put that together. So and I know he's been working diligently to basically integrating the analysis page and the traffic light page all into one, and it's great. So this way you don't have to be clicking around looking for the information. You'll have all of it on one single page, and very interactive and able to move around it. So it's great stuff. So Steve, I'm going to pass it over to you. I left you plenty to talk about. Hopefully, what have you made out of this dollar move?
Something, we've had plenty of false starts for the dollar higher, right? The fact though remains that I'm a little bit torn. I was saying the same thing yesterday. I feel that since the recent move we had is a consolidation, and since the trend has remained lower, I feel that there is a good chance that we're going to push the new lows from here. But at some point, on the other hand, I'm very careful since a few months ago of being like overly short the dollar, because I do believe that at some point the dollar is going to squeeze people out, because people have become so accustomed in just being short the dollar and so comfortable with that, and positioning is extreme, sentiment is extreme about the dollar. So I'm really afraid of being on the short side of the dollar, because I think that at some point we're going to see a massive reaction higher, and it's going to catch the market completely off guard. So I think it's a tricky situation here with the dollar, and as you said, especially today's moves, we don't have something to really back them. So is that some type of a one-time flow for some reason that we don't know yet? Is it the beginning of something more? I think it's too early to say. So we need to be cautious.
Yeah, it's definitely surprising how strong the dollar has been this morning for, again, no reason. So, but we got a little bit of data coming up. I mean, we've got consumer confidence in Richmond, Fed manufacturing, and we have Bostic from the FOMC is speaking, and maybe that'll move the market. I don't know. So I guess we'll have to see. So thanks, guys. I'm gonna get to my trading, and good luck today. And we'll talk to you soon.
Yes, mate. Bye bye. Hey, Dale. Are you back in our company?
Hi, Steve. Good morning. How are you?
I'm good, mate. I'm good. How have you been?
I'm all right. I have to say that, except for a continuation move in the yen and a pop in Canada, that I'm pretty shocked and surprised by how strong the dollar is today.
Yeah, we already the DXY has already formed a bullish engulfing on the daily chart. So that's quite a strong indication.
It's pretty sneaky that it happens the day after what a lot of people thought was a breakout in euro.
Yeah, that's very true. But you know how the markets are. Yeah,
mean Mr. Market. That mean man. Oh, he's
Absolutely.
trying to fool us.
But something, at least the DXY didn't really fool people, in the sense that we were saying yesterday as well that it looks likely that we're going to push the new lows, but for the time being we are just in the middle of a consolidation, right?
Right.
So there is absolutely no technical way to know if this choppy environment might resume for several more days, or if we're just going to go straight lower to break the new lows or whatever is going to happen, because simply speaking, it's absolutely impossible to predict how a consolidation is going to evolve in advance.
Yeah, bottom line, you have to just wait for your spots. So, it made me a little more tepid about, saying that the 3 drive in the end was going to work, because I didn't think the dollar had bottomed. Okay, so it was kind of like 2 conflicting ideas at the same time. But you know what? Always go with your technical work, because at times you try and figure out the whole jigsaw puzzle, you'll never pull the trigger. So just, wait for your stuff, wait for your setup, and just take it. And in between, nothing.
Absolutely. And you know something, even when the markets are a little bit muddy, like they seem during the past few days, if you're monitoring at at several markets, you will still find a few instruments that might be a lot more clear than on average, like the vast majority of the things you're monitoring are. So if you're really looking to trade something, and you're monitoring a few instruments, you will always find something that looks more clear to you. For example, I was writing like, what was it, like half an hour ago or an hour ago to the chat room that things are a little bit confusing today, but metals, for example, technically speaking, seem very clean for now, because here is gold. I didn't touch this trend line resistance. It's exactly the one we had on the chart, for the past at least couple of weeks.
You had a different trend line in euro too that I don't think got through. Similar line that you have in gold. Oh, it did for you.
It is.
Okay. All right.
It did. But you know how it is. You can even redraw it a little bit different. But that's how I had it. I had it drawn, right? So we seem to have had a false break if we draw it like this. But on the other hand, gold made a perfect test of this triangle's resistance and got rejected. Silver
looks like a descending triangle if it takes out 1310.
Yeah, but we need to be patient about that. Silver also tested the trend line and also a horizontal resistance area. It seems to be responding to that as well for now. Copper, if you remember, we had a friend asking yesterday about copper, and they said that, listen, copper is about to test a very critical level, so let's revisit copper tomorrow and see what's happening there. So copper got a very nice reaction from this confluence of this horizontal support area. It's the previous low as well there, and this descending trend line resistance for this expanding triangle. Then it started becoming a trend line support for this triangle. So we saw a very nice initial reaction from there. On the other hand, we got rejected like an hour ago from this low here. So copper is a little bit. It still plays technical. I mean, in the sense that it reacted, to this confluence of supports, which is nice, but it's still unclear. I still believe that the chances are very high that this is a correction, because I'm not seeing an impulse. But if we accelerate lower from here, then I'm going to start viewing this in a totally different way. So for me, we're currently at a very critical juncture for copper, because this could easily have been a correction. I mean, it looks like it's overlapping, slow in the vast majority of the days. But we need to see a reaction higher, because if we see the opposite, so for example, if we see this level break and an acceleration towards the next area, then I'm going to have to start viewing it as something different, like as a beginning of something different, right? But anyhow, still holding at a critical level. So technically speaking, still playing out nicely. So at least metals offer some better clarity. Yesterday, if you remember, we said quite early on the day that I said specifically that I believe that the indices are going to close higher on the day. That I don't believe that they can give back their gains, and I think that we should have at least 1 or 2 days of a risk-on environment and see perhaps today or tomorrow what happens. I think that, you know, having seen some very impressive moves, for example, it's not only the S&P, it's also the Nasdaq. I mean, the Nasdaq had a huge day high, right? So, you know, I'm very, very carefully monitoring this because, you know, I want to see what kind of a follow through these big reversals will have. If we see some very like tepid follow through and, you know, this to be stalling like imminently, like within the next 24 hours, I'm still going to be looking either for lower levels or for a resumption of this choppy environment. On the other hand, if I see a couple of strong days following, I'm going to start, you know, viewing this as potentially, you know, a correction that has already played out. So, you know, we need to be careful. Regardless, to give some more specific levels, I think that this 2690 to 2700 area in the S&P is quite an important resistance area. Yesterday, we stalled at the first area we were looking for, 2640. Then we gave back plenty of the gains, but then later on the day we saw some strength coming in and we pushed through it. So now it's this area I'm monitoring, as I said, 2690 to 2700. If we break above that area as well with momentum, then, you know, I'm going to start being a little bit less cautious. One thing is for sure, this descending trend line is going to be critical. I think that if we manage to break above it, the chances for a push to new highs will have increased substantially, right? But the same thing applies still to a breakdown below this channel's support. We broke above it, we came down, we retested it in the 200 DMA. So I think that we should be looking at these two areas. I think a break from either of those will definitely see some good follow through. In one case, I think we're going to new highs. In the other case, I think that a push towards 2480, 2400 is going to be more or less a given. So still, the environment for risk is a little bit muddy as well. That's why I'm saying that, you know, not every day is a day that you should be looking for opportunities to be trading. So unquestionably, seeing that dollar move today, especially not having something solid backing it, and seeing where risk assets are at the moment, I would say that, you know, if you want to be a little bit prudent, this is a period of time that you should consider, you know, being more or less on the lookout and, you know, more or less monitoring than acting, right? I'm even considering I still have 3 positions. All of them are doing good. One of them is still 940 roughly. Sorry, 94, I mean, 93 to 94, somewhere between the 93.8, something like that. I'm looking for 128. We didn't hit it once again today. It looked like we would. We seem to be rebounding. I'm considering of closing it if we see a daily close above yesterday's high, because as I said, you know, things have become a little bit muddy. The other one is my short position in palladium. I feel good about it because, you know, other metals have been rebounding and palladium has completely failed to show any strength, and that's something I like. So I'm not considering closing my half palladium position that I have remaining. But on the other hand, I'm also considering closing my pound Aussie. It's still like 300 pips in the money, and, you know, seeing the combination of candles. I mean, yesterday we had a pin bar. Today we seem to be getting some follow through by having a you know, a negative day. I think that, you know, we might see a correction lower, and, you know, I'm lucky here to be like 300 pips in the money. I think, you know, I'm probably going to be closing this day and perhaps the USD CAD as well. And, you know, I'm going to be watching for the market to clear up a little bit before I commit to anything more. Now, having to do with other currencies, and then I'm going to go through questions. The Aussie remains weak. There's no question about it. We still remain near the lows. This looks like a consolidation. But as long as 76.40 is holding, you know, I can't turn overly bearish there. Kiwi also has a couple of potential interpretations. One of them is that this is a consolidation before a push higher, since we came from lower. The other one is, I mean, that other interpretation needs to play out rather fast for it to be valid, that this might be some kind of a head and shoulders formation. But for that to be triggered, we need to see a move below 0.7180. So the longer we fail to break below 0.7180, the higher the chances that this is going to be some kind of a consolidation before higher. But as long as we remain below here, there is still a chance that this can move to the downside. So this is also one currency pair that technically looks nice as long as it produces a move either above here or below there, because at the moment it's in the middle of nowhere, as the DXY, as we saw, is in the middle of nowhere, right? So a lot of things are in, in positions that you really cannot commit to anything new, because simply speaking, there is no reward to risk ratio, and you wouldn't know even if you have some kind of a bias, you wouldn't know where to place your stop, which is always a huge problem, or where to target, to take profits. So as I said, I think this is the period that we should be a little bit prudent. Now, I was speaking about the pound yen yesterday. I remember very clearly that we didn't have time to show, and pound yen, in my opinion, is quite interesting, from a technical perspective as well. We had a very nice area, the 148 area, that was quite important to the market for some time. But, having seen that we broke below it, we broke then above it again, it seems that the market is not paying so much attention to it. But I will tell you one thing for sure. We had this move higher, which in all actuality looks like a corrective move in the longer term, right? You can see it here. And now the question is, what are we doing in the shorter term? So, this move lower looked decently strong, and the move higher for now, it's channeled, it's well behaved. So I think it still has the chances of being a corrective move. So I think it's very interesting here. I'm monitoring. We got rejected today from the 50 DMA. It's also a high that we had over here. I think that if you see the fibs as well, it's like below the 50% fib. I think that for the pound yen to actually turn higher again and consider that it's still in an uptrend, because let's be honest, we still haven't seen anything but a series of higher lows, right? So even though we violated this ascending trend line, we still haven't violated the fact that we've seen series of ascending of higher lows. So the question is, what happens from here? In my opinion, because a trend line, can actually fail you. I mean, it can give you a false signal. It's all about monitoring this channel. If we actually break below here, there, and we saw some acceleration, I think that we're headed quite a lot lower. Now, on the other hand, if we break above here and we make it to there, and we're still showing some strength, I think that there is a chance that we're going to see a new high in the pound yen. For the time being, my intuition tells me that it wants to resume lower. That's one of the reasons, the fact that I see several yen pairs moving higher in what seems to be a corrective manner, is the reason why I'm not looking so much. I'm not looking yet for an opportunity to be long the USD yen. For example, the USD yen, as we speak, is retesting a broken triangle, the broken triangle's trend line as resistance, right? The triangle support as resistance. And this is also a horizontal area of support resistance. So, I'm still not convinced about this bounce in the USD yen, and hence I'm also not convinced in the bounce in the yen pairs yet. I'm not saying that it's impossible that we found some type of a low, but the evidence is still completely inconclusive. And experience has told me that jumping the gun in trying to time reversals is usually a very tricky game, and it might cost you dearly. So what I'm saying is that because because I was also seeing the questions yesterday and a lot of people that were looking to bottom pick the years. I think that, you know, you want to do it, you have a plan in mind, you have an appealing reward to risk ratio, by all means, you know, you should be knowing what you're doing. But, you know, I would be cautious, or at least if you want to hear this advice, at least, you know, start with low leverage your attempt. And, you know, when you get more evidence and more comfortable that, you know, that a move that you're seeing that is evolving to, you know, something more impulsive, then you can perhaps increase your position. So don't go all in something like that.
That's right, Steve.
It's quite dangerous.
Use less leverage when you trade the markets. Use wider stops so you don't get picked off. If you don't use less leverage, you might lose your head and your account will be dead. Use less leverage.
Agreed, 100%. So we have we have a few questions. Let me address them. First of all, there is a question if asking if the USD CAD might be forming a head and shoulders formation. And you know something? I was looking at it yesterday. Yes, it might. I mean, I went down to the 4-hour chart so you can see it. Somebody can say that this might be a shoulder, a head, and we might be in the process of forming a shoulder. It might. But, you know, this is one extra reason that I said since yesterday that 128 is a very important level, because in this case, it's also the neckline of this potential head and shoulders. But
Steve,
unless we see, yeah.
Ziggy wants you to sing this analysis on the Canadian. All right, you don't have to, buddy.
No, I'm not going to sing. Although I have a correct voice. I mean, I used to play the piano, and you know, when I was young, etc. And at least, you know, I understand notes, but you know, my voice is not good and doesn't have much potential. So thank you, Ziggy. No, perhaps if you find yourself in Greece and we found ourselves on a beach, yeah, sure, we might attempt that.
Together in a karaoke bar. How about that? All right.
Yeah. Okay. Let's do it like that. Okay. So 128, regardless, remains a very, very important level for the USD. Because, as you said, potentially it's also the neckline of a head and shoulders formation. But until or unless that breaks, you have to respect the potential for another push to the upside, towards 133, for example. Right. So I'm still short the USD CAD half of my initial position, but I'm a little bit cautious. I'm not seeing follow through here. Anyhow, let's see how we close the day. Perhaps the dollar gives back the gains that, you know, haven't come really with much conviction. Another pair that is worth noting here is the USD NOK. I see the potential for another push lower. I see this potentially as a triangle. We found support once again today. It still looks heavy. So in my opinion, regardless of what's going to happen with the dollar, one thing remains a fact, is that NOK remains one of the stronger currencies against the dollar from the commodity complex, right? So, you know, that's something to note. USD SEK also seems to be attempting, you know, a move higher. In my opinion, 826 is quite an important zone. If we break above it, you know, it's quite likely that we're going to see a move towards the 850, 852 area. So USD SEK is a pair I'm monitoring. Looks quite appealing to the upside. So it looks like one of the dollar pairs that I might consider being long if I decide to gain some long USD exposure here. But you know, I have no position yet. It's just something I'm monitoring closely. About the looked at the cable, you know, I'll tell you one thing, no question about it. The cable has been one of the weakest today, but it has been one of the strongest against the the pound has been one of the strongest against the USD for several days. I think that the move lower, and coincidentally I said that yesterday, I think that even if we see a move lower, nothing really changes here with the cable. I still expect a push to new highs as the more likely scenario. And I think as long as we remain above 137, there's nothing to really worry about. I mean, we can move back to 140, we can even move back to 139 and find support and resume to the upside. I mean, nothing moves in a straight line. So yeah, strong move today, but does it technically change the picture? No, I think it doesn't. Let's have a look at the pound kiwi that you asked for. Okay, the pound kiwi still has the potential of being in a bull flag. Now, of course, if we see some acceleration from here, we can have another discussion, but one thing is for sure, 192.25, quite an important support zone. I see no reason at the moment why I would want to be short the pair, right? I mean, I'm not a scalper, so I'm not answering, this thesis is not like a very short-term thesis. I'm not talking about today or tomorrow, but I'm not seeing yet any reason why I would want to have short exposure in the pound kiwi for more than, a few hours or a day or something. So nothing has really changed here, right? I mean, we had a big triangle, we broke above it, we came down, we retested it. We then had another triangle, we broke above it. So, for the time being, I think it remains quite constructive. We need to see a lot more for me to start believing that, there's an alternative interpretation here. But we haven't seen something different. Hi, Steve, would like your update on pound kiwi. Oh, we just did that. You pointed out confidence for a move to 198 days ago in a deep pullback. Do you change your mind? No, not yet. As I said, Martin, not yet. I see nothing yet that would change my mind. Treasuries. There is a question about the treasuries. Let's have a look at them. And speaking of that, let's have a look at the bonds as well, because we didn't have a look at either of the benchmark bonds yesterday. It's a good opportunity to do so today. So, bond remains well bid, but in my opinion, still no reason to view this move higher as anything else than a corrective move, right? You can see that it's overlapping. It can simply be an ABC. We have a nice resistance at the 50% PB, 166.70. So, in the short term, they look like they remain well bid, but in all honesty, nothing has changed for me. I'm still looking for this to fail and to push to the downside. I see no reason why I would treat this as a tradable bottom yet. Now, having to do with the treasuries, same thing applies here, meaning we got a bottom exactly at an area at a very nice confluence of supports. And what has the reaction been from there? Simply a very slow, choppy, barely ascending channel, right? So do I see anything impulsive here? Anything that tells me that treasuries want to move to the upside or want to accelerate to the upside? Absolutely nothing for the time being. Absolutely nothing. I mean, even if I had to make an argument why I would want to buy treasuries, I wouldn't really find much to say. So I still think that the risks are tilted for a resumption to the downside. I have nothing else to say here, in all honesty. If we see some type of an acceleration to the upside, if for some reason, which I still don't see evidence of that, I just see an RSI that has gone almost close to 60 and price has done almost nothing. So in essence, RSI has just worked off the oversold conditions and price has done almost nothing. But even if we saw some type of an acceleration higher, I think that this area, the 123.40 area, would be very hard to crack. So even if for some reason we see a break above this channel and an acceleration higher, I would still be looking for opportunities to be short the treasuries. Right. But I don't see that yet happening anyhow. EuroCAD and Euro Tier Y. Let's have a look at them. Here is EuroCAD. still toying around with this ascending channels support. I think I said it yesterday as well, although we were near the highs. I think that it's going to be healthy to at least see, we already had a little leg lower here. I think it would be healthy to at least see one more leg lower towards the 38.2. And I think there is a decent chance we're going to do that. So I think it looks good for another, for a resumption to the upside, but not buying it at these levels. It makes no sense. Would be nice to see it, push lower towards 156.50 and then perhaps look for a buying opportunity. Okay, let's have a look at Euro Turkish Lira as well. Although you know my opinion about the Turkish Lira, it still remains one of the weakest currencies that you can find out there. I mean, it's no matter which chart you look for the Turkish Lira, it's like a relentless depreciation of the Turkish Lira, relentless. And you can see it here against the euro as well. I mean, just look at this. This currency was in the middle of 2010. Okay, let's say roughly 8 years ago, it was below 2, and it's currently approaching 5. I think it's extremely dangerous, especially given the geopolitical problems and the war-like situation that Turkey is, and with all the internal problems as well. I think it's very, very dangerous trying to bottom pick the Turkish Lira, or in essence trying to top pick the Euro TRY, or trying to top pick the USD Turkish Lira. I know that there is an extremely appealing rollover fee, but look at it. We said that this was a range. This is the USD TRY, by the way. I said that this is a range, and you should respect this range, meaning that since the USD Turkish Lira has been very technical, whichever side we see this range break, we should see strong follow through. And we broke it to the upside, and this is what happened. We're already to new highs, and who knows what happens from here? Just look at this chart. Just look at it. Right? There is just no end to this uptrend. So be very, very careful. Oh, my pleasure, guys. Crude. Yeah, let's have a look at it. Here is crude. Completely unsurprisingly, we're about to push to new highs, right? I would like to see, ideally, a move towards here, the 127.2, but I wouldn't even rule out a move towards there, right? The 161.8. But I have to tell you that after the push to new highs, which I was absolutely certain it's going to happen. If you remember, we had many discussions about about crude, and one thing I kept saying is the following: is that I don't know if it's going to happen from here, or if it's going to happen from there, but we're going to see a push to new highs. In my mind, I was 100% sure about that. What I'm worried about is that this might be a terminal push higher, at least for a period of time. So I'm not looking to buy crude. I was hoping that crude would actually play out the second scenario for a move towards 55, because I would be buying it both hands if it came down to that. It didn't happen, so I stayed out of the market. But I have to tell you that I'm not looking to buy it anymore, because seeing how extremely the market has been positioned, I would really be looking for a push and a reaction either from there or from there to actually look for a big squeeze of the longs for a much.
Steve, on the 1 and 4 hour, on the 1 and 4 hour and the interview, I have to do the interview now. There's potential third drive. We're heading up towards the third drive here, so that kind of ties in with you being a little bit skeptical about crude up here. So if you look at the 1 and the 4,
I see it. Yeah, I see it.
Nice analysis, man. Like every day you have, a million pearls that you share with the community.
It's my pleasure, Dale. That's what we do, right?
It's not who we are, but it is what we do. So, Michael, welcome to Faith.
Enjoy the interview.
Thank you, buddy. I'm going to make you the presenter. Looking forward to meeting you, hearing you, and I believe you said you had a few charts you wanted to share today. Welcome to FACE. I hear
just
you.
Unmuted
Can you
him.
hear? Thank you.
Unmuted him, Dale, because when they call from a phone, you need to unmute them yourself. Okay.
Okay. Thank you, Steve. Welcome, Michael. How are you?
I'm doing great. How are you? Thank you for having me, by the way.
Great to meet you. I didn't know until I did due diligence at the last minute that you're part of the crew with Lance, because I've been to your website before and you're a partner at realinvestmentadvice.com, and you're also a co-founder of, what is it, 720?
720 Global.
Okay, so is that an RIA?
No. 720 Global provides economic macro investment advice
Okay.
to everything from individuals up to institutions.
Okay.
I joined with Lance at Real Investment Advice. I think we officially signed papers. It was October-ish, November. And we are working diligently to put together a subscription service, which is something I was doing at 720, but this will take it to even a greater level.
Okay, so we know where you are. Tell us how it began for you. The beginnings of your journey and how you ended up in this industry.
The beginnings of my journey are actually when I was 13, 14 years old. I was gifted some shares of Beefsteak Charlie's. Beefsteak Charlie's, for anyone that doesn't know, because they've been out of business for 20, 30 years, was a chain restaurant. Nothing special, but they used to have peanuts, and there would be peanut shells all over the floor.
You got those shares for your bar mitzvah.
Exactly.
Okay, buddy.
and ever since then, I have loved the markets. So I wanted to. I went to college, got a degree in finance, and
that didn't help you.
That didn't help me, and then I had to relearn everything. I got a CFA about 10 years later. Again, I had to relearn everything. It was funny, when I took the CFA, there was a section on swaps and derivatives, and I had been doing a lot of that in the real world, and I really did have to relearn it to take the test.
Isn't that something?
Just
the difference between educational knowledge and practical knowledge. They're almost two worlds apart.
And different languages as well.
Right, and you know what, you can't learn experience. It only happens with the passing of time. So
that's right.
Very, very interesting market environment we're in now, Michael, since February, where the market became more binary. And before that, we were just in this parabolic or grinding higher, never really stopped for any kind of correction. And I've been to your website, and you guys actually do give advice about, protecting yourself. I've read Lance putting on and taking off hedges, recommending people do that. How do you hedge this market, and what are you telling people in this environment to do?
So it's a tough market. Fundamentally, there's no, in my mind, this thing is grossly overvalued, and this thing will correct. Fundamentally, we always revert back to the mean, regress back to the mean, if not lower.
Where's the mean? Where's the mean in your opinion? On the
in my opinion,
yeah.
I mean, it can be half of where we're at today, if not lower.
Oh, okay.
We're at, on some measures, on almost.
People don't remember that markets could trade not just at book, but below book. Just like they could sell way above book, the market could sell beneath book.
Oh, absolutely. I mean, we saw it in 2008 and 2000, the S&P was down over 50%. So, that may sound like a startling number, but we've been there twice in the last less than 20 years. And you look at valuations on all kinds of, measured all different ways, and we're at or near the peaks. One of the graphs, I don't know if I can show this, but I will try.
Got it. Nominal GDP.
Okay, so what I wanted to show, right, the one complaint that I get, or the one argument I get is, yeah, but valuations can go higher. They were higher in 1999.
Yeah, I've heard that.
And that's a fair case. That's a fair case. When you look at CAPE, for instance, I believe we hit 45 in the late 90s, and currently they're in the low mid 30s. And that's a fair argument, but what's not fair is you need to compare the environment of the two. In the late 90s, government debt was turning into they were starting to run surpluses for a year or two. Productivity was steaming along. The economy was growing twice the rate it's growing now. Baby boomers were spending like crazy. They were in the heart, they had kids, and they were really in the heart of their spending cycle. So what I did was simply adjust CAPE for GDP. And when you factor in the environment, you can see that the current CAPE is actually much higher than where it was in 99.
Well, you could just eyeball a chart and look at the advance into 99 and compare it to the advance that we've had since the low in 08. And just the magnitude, the price move, the chart dwarfs. If you thought 2000 was a bubble after that advance, and you thought 2008 was a bubble after that advance, you can't help but look at the chart and say, this is not a bubble. You can't say it.
Right.
Don't you think with just price magnitude and duration?
That's right. But what really bothers me is, and I'd like actually comparing this to 1987, because 1987 was a bubble of sorts. Valuations got a little high. Interest rates were moving much higher. But in 1987, the economy was starting to boom. Again, demographics were in our favor. Interest rates were trending lower, even though they popped higher that year. And the environment in general was going to be very friendly for stocks. The economy was friendly. Now the market cracked hard, but it came back because at the end of the day, the support for earnings, which is the economy, was there. What bothers me this time, and it's unlike what we saw in 99 either, is that the economic support just isn't there. We have deficits that are both federal, corporate, and consumer deficits that are running sky high, and we are solely dependent on debt at this point for growth. Productivity has ground to a halt, and our demographics slowly start becoming a headwind instead of a tailwind. So what bothers me is that we're not only sitting at the perched at valuations that are either at peaks or unprecedented, depending on how you want to look at them, but at the end of the day, there's really nothing underneath it economically, fundamentally, to support it. Okay. And we've been slowly becoming more and more dependent on the Fed. So the logical question I think investors need to ask themselves is, can the Fed bail us out? And that's the experience so far.
I just want to give people a visual of what we're talking about here, Michael. So I'm going to make myself the presenter for just a second, just to illustrate the point that we're talking about. Here's your advance into 2000. Okay. Right. And then your low in 2002. Here's your advance into the last financial crisis. And look at the advance we've had here. So the magnitude of the advance has been at least 2-3 times as much as the previous two so-called quote unquote bubbles. So I just wanted to
again, but the important part is, and I don't know, can you see that graph?
I'm going to make you the presenter again. I just wanted to show.
Okay.
Okay, the ball is yours in honor of the NCAA championships. I just passed. I gave you a lob above the rim, and you jam it in, buddy.
Okay, I'm trying to jam it in.
All right, so you might have to.
I got it. I got it.
God, here we are.
So take a look at the graph on the right.
Okay.
And even the graph on the left. The left is just GDP growth year over year, and it goes up and down, up and down. Right. But when you take a look at 3-year moving averages, Look at the trend.
Yeah,
So that's your
downward
support
sideways.
for earnings, and sideways to down.
Yeah.
And you know the Fed's telling you this. Their long-term growth forecast, I believe, is 1.9. It's just how much more debt are we going to add to the system, and can we? And again, I think this is a question of the Fed. How much more are they willing to print money and to boost asset prices?
Well, right now you wouldn't say they're doing that, right? I mean, right now we have, instead of quantitative easing, we have quantitative tightening, right? Guys like Peter Bookbar talk about that.
Oh, absolutely. And this graph I just posted up there is the S&P from 2007, and then you can see the Fed balance sheet. And look how aligned the three green bars, the three green sets of bars on the S&P line.
Yeah.
Look how aligned they are with QE.
Yeah.
Now the only thing that really stands out is that purple area. This graph is slightly old, so it's should have been up at 2,800.
Right.
But it's the enthusiasm over Donald Trump being president, which over the last month or two may be losing a little steam. But in the meantime, that's what's driven the market. It's QE. And prior to the what we call the Trump bump, the market was actually lower during periods when there was no active QE going on. So the Fed has printed almost $4 trillion. They bought Treasury securities. So it's not a direct link to the equity market, but they've taken $4 trillion of fixed income securities out of the market. That money has to go somewhere.
Yeah, so it was forcing people, what they call that, suppression or economic suppression, so that savers got hurt and were forced to take risk to earn a yield and a return.
That too. But I mean, just think if you owned a 10-year Treasury, the Fed bought it from you, you have to go buy something else. So eventually it works its way up the pipeline. You may buy a AA corporate bond, so you're not taking that much more risk. But then the guy that owned the AA corporate bond is going to go into junk, or he's going to go into single A, or he's going to go into equities. And it works its way up the chain. So now we're looking at the opposite now. The Fed is slowly, and I mean slowly, if you look at the increases here, the decreases are coming off much slowly, but they are taking liquidity out of the market, which is having the opposite effect.
Right. You know what?
And
go ahead. Finish up, Mike.
I was just going to say, at the same time, they're raising the Fed funds rate.
Right. And the short end for financing our national debt isn't making it easier because the yield curve, the big move has been on the short end. We've seen it, triple, the rate triple in the last 6 months, LIBOR, et cetera. So, I read something on your realinvestmentadvice.com. I was starting to read, you wrote a piece on treasuries. And since we're talking about historical things, I was rather surprised to see that when we had 1,000-point down days, 700-point down days, that the old flight to quality trade into the bonds was almost non-existent, that there may be a new paradigm going on, that they could both be bad together and both be good together, but there was no flight to quality or marginal flight to quality into the bond market on those big sell-offs. It looks like now the flight to quality is to cash.
Well, that's the $1 million question. So I just pulled up two charts. The one that you can see right now shows how over the last 4 recessions, the difference between an S&P portfolio and a more traditional 60-40 S&P 10-year Treasury portfolio, simple portfolios. But you can see by the green bar how having almost half of your portfolio in 10-year Treasuries has hedged during those big drawdowns. So that's the $1 million question. And that gets you to the article I believe you're talking about.
Yeah.
Which is, and it's not just 10s, 2s, 5s, 10s all look the same. And they all have a very similar channel pattern.
On the verge of breakouts everywhere?
Well, that's the million-dollar question, right? So what we did in that article was we looked at the period here, 87 and 89, what happened. We looked at 94, we looked at 99, and we looked at 2007-8. Now, we all know that 87, and then we had a recession in the early 90s. The market was down, I believe, about 20%. I'm going to skip 94 for a second. 99 and 2008, S&P was down almost 50%. Techs were down about 83%, I believe it was in 99. 94 was the anomaly. We had a lot of problems that occurred in the debt markets, Orange County, Mexican peso crisis, but the stock market pretty much held its own. So the question is, now we're looking here, we're at that line again. It's interesting. The most common analysis I see is, well, rates have only gone up a point and a half. If you look at this line compared to that, it's not that much, or that, or that.
Yeah.
Here's the problem with that analysis. So say we've gone up a point and a half today. We went up 3-4 points those times.
From
the amount of
levels.
leverage today.
Yeah.
Well, from higher levels, but the amount of leverage today is much greater than at those points. So
Good
it's
point.
not just the change in rates, it's the change in rates times the amount of leverage. When you have $1 million house on a floating rate mortgage, that change is much greater than when you have a $400,000 house on a floating rate mortgage. So I think we're at a period that really matters. Do we go lower? Do we go higher? In that article, I also said we could meander. I just don't think that's what's going to happen. I personally think we go lower. I think that, yes, bonds are in a bubble, and yes, rates will be higher in the future, but I think in the short term, we may go back and test those lows of 2016 before the ultimate trip.
What, 130?
Much higher.
130 in the 10-year, I believe.
Right.
Okay.
That's correct.
All right. So let me ask you this. Do you do any sector work with the market? Do you think that there could be, perhaps a lot of people are looking for the potential with trade wars or incipient inflation? Commodity markets have been very depressed. Are you interested in the oil sector? Are you interested in the precious metals sector in any way?
I do like the precious metals, especially gold. Although silver technically is looking like it's ready to break out in a big way, but I think gold, and I'm not necessarily a gold bug. I just think there are periods in time when it's important to own gold as part of a well-balanced portfolio. The government, not only here, when I talked about the Fed printing $4 trillion, that's on top of 12, 13, 14 trillion from all the other major central banks. Right. So the dollar, the yen, the euro, the pound, everything is being debased in a big way. And the question is, what can you own? I'm not a buyer of Bitcoin yet. I fear that the government will.
Would you buy it at 2,000?
The problem I have with Bitcoin, I love the concept. Maybe not necessarily Bitcoin, but I love the concept of Bitcoin. The problem I have with it is that the government will not like the competition. So when I pay you over Bitcoin, it's hard to tax. It's very easy to do illegal monetary transfers. At the end of the day, the nation must have control over its currency. And it's not clear to me that they have control over their currency with Bitcoin. So it doesn't mean Bitcoin. I'm not saying Bitcoin will go away, but what scares me from it is what the government does and how it controls Bitcoin. And then when they do that, is it still the same investment?
Well, maybe they're letting this grand experiment go forward so that the public becomes comfortable with it before the Feds put out their own cryptocurrency.
Absolutely.
I did want to ask you something when it came to the gold. What kind of ownership do you recommend, like an ETF like GLD? Because I've noticed some miners have been way underperforming bullion, and normally that's not such a good sign for the bullion. It's better when the stocks lead the underlying commodity.
Right.
how do you tell people to own it? ETFs, miners,
Well,
physical?
I kind of think there's kind of three ways to own it. You can physically own it, you can trust someone to own it for you, or you can own it through the miners. With the miners, you're basically buying gold that's in the ground. The problem with the miners is that they have proven to be very poor managers of businesses in the past. But like you said, some of these guys are trading below book value. They're leveraged to the price of gold. So if gold pops, the miners should do very well, especially given that their prices are, compared to the price of gold, very low here.
Any view on
gold itself?
Any view on the energy markets, that space?
It's getting pricey here, but there's there's a lot of geopolitical things going on in the world. So,
Sure.
Saudi Arabia, Iran. So I think it's a little pricey, and I think at the end of the day, that's, this goes back to some fundamentals, that this is a big problem for the economy as we're getting into the mid-upper 60s. If we get into the 70s and 80s, you're going to see an effect, which will slow down the economy. And I don't think the economy is growing all that fast. I think we're going to see GDP growth sub 2% in the first quarter. And if you start ramping up oil into the 70s, I'm not so sure we don't stay in the ones or actually drop lower.
Okay. Well, I appreciate your views. Any one last thing you'd like to wrap it up with as you look ahead into, we just entered the spring season, spring into summer. What should we be keeping on our radar according to Michael Leibowitz?
Well, I just think it's important to have a balanced opinion. So I presented a pretty disturbing fundamental view, but I really think that you need to follow the technicals, you need to follow the market sentiment. And right now, the bull market is still in control. You have to give the stock market bull the benefit of the doubt until it technically starts proving otherwise. It's
you have
showing
a red line.
some volatility.
Do you have any kind of red line that would tell you that the bulls have lost control price-wise? Or
we have to break the buy the dip mentality, and so what that's going to be is a series of lower lows and lower highs.
Great
and
point.
That's what I'm looking for. How the pattern actually shows up, I'm not sure, but if we keep reaching lower highs and then falling back down, that's breaking that muscle memory of the market and the algorithms that drive it.
Okay, what a great way to wrap it up, Michael. Thank you so much for your time today. People could follow you at Michael Leibowitz, and there's Michael's website, and this is for subscriptions and market letters and great content.
Thank you. We post articles all the time, so feel free to hop on the website, realinvestmentadvice.com, and check us out.
Thank you again, Michael. You're now my trading warrior brother. Thanks for your views, and I really appreciate you taking time out of your day. Say hi to your team. Yeah, say hi to your team for me, and good hunting during the spring quarter. I hope it is a prosperous one for you and all your subscribers.
Great. Thank you very much, Dale.
Okay, Michael. All right,
Faith,
you're very welcome. People enjoyed your analysis, and that's a wrap for Turnaround Tuesday. See everyone tomorrow. Good hunting the rest of the day. And remember, don't just count your pips, count your blessings. I'll see all you warriors tomorrow, bright and early, 5 a.m. from Southern Cal. Live, The Face Show. Adios. You're welcome.